Hello, welcome to the Stockout. This is your show for all things related to the retail and CPG industries at FreightWaves. I'm one of your hosts, Mike Baudendistel, joined by Grace Sharkey. Grace, good to see you.
Yeah, happy Monday. It's going. We actually got some snow up here this weekend up in Michigan, so you never know these times of years what you're gonna get. But yeah, doing good. How's everything in your neck of the woods?
Doing fine. My family is out of town, so I did something that was very human. Sat in front of the TV and binged Fallout. And in the
Nice.
spirit of that, and given that this is a CPG show, want to ask you what CPG item would be a must-have for you in a nuclear fallout shelter?
I put some good thought into this, and I think it's a really close tie between toothpaste and shampoo, but I think toothpaste would win at the end of the day. It's just something like I feel that, you go if even if you go for like a day or so, that feeling in your mouth drives me nuts. Plus, like, just think about all the oral health and everything it wraps up into it. I think honestly it would be toothpaste. I know it sounds crazy, but it's that some type of hygiene related product would probably be the winner for me.
Okay, interesting. I was thinking something vitamin D related, some kind of vitamins to supplement. You're not getting vitamin D, but certainly not Lunchables. Based on what we talked about last week, that would just make you more sick. That might be worse. Like plot twist, the the, the cancer causing things in the Lunchables are worse than the radiation outside.
That's true. Yeah, that's true. That's a good one though. It's funny. I heard the show was good. I need to catch it, but I heard it's. Did you ever play the video game for it as well?
I haven't played it, no. But I did see they cut the price to like $5, so maybe I'll jump in. I will say the show is kind of brutally violent. Most of the violence is really juxtaposed against kind of old timey happy music, which lessens the impact somewhat, but still you have to sort of be
Yeah.
up for that. Um,
Nice.
so that's, I think, probably enough about that. Maybe we should talk about your article. You just published an article, or maybe before we do that, we should just make sure people know how to sign up for the Stockout newsletter, which all you have to do is
True.
go to www.freightwaves.com/the Stockout. And up at the top, supply chains can sign up for the Stockout, and also running on ice and any other newsletters you want to sign up for. And then there's be some discount codes in the newsletter for State of Freight, which hope people see people at State of Freight June 4th through the 6th in Atlanta. But Grace wanted to, there's graphic. Hope to see you in Atlanta, June 4th and 5th.
Yeah.
So Grace, you posted an article this morning on Shein and Flexport. What can you tell us about that?
Yeah, well, I will say too, there's a backlink to our newsletter on this as well, because we did, of course, talk about Shein in the past and a lot of one of the ethical issues behind Shein in particular, when it comes to, of course, breaking labor laws in particular, and allegedly, we could say, and also copyright issues. But it came out actually about a week and a half, and they're smooth about it because it came out on LinkedIn. There wasn't any press release about it at all, but Shein is actually going to be working with Flexport to offer fulfillment services now to their U.S. marketplace sellers. So, how this basically works for those who are on Shein and are working with Flexport, there's going to be a quick integration now that allows you to connect both marketplaces and operations, both platforms together, so that you can, on even just Flexport alone, be able to update your inventory, take a look at your order entry, what's coming in, and make sure that that's being fulfilled correctly. And then for those who are already Flexport users or sellers and might be, selling on Amazon through Flexport or some other type of marketplace through Flexport, can now also choose to sell on the Shein network as well. So I think this is pretty interesting, especially because we've really been watching Flexport and their growth. And talk about someone huge to team up with in particular. I think this is probably a really great partnership for them to see some really great return. I mean, let's looking at Shein alone, and especially it's tough to see what their U.S. market is in particular because again they aren't reporting any of that publicly, but they're expected to get up to about $59 billion in revenue by 2025, just in this next year. But they do have 13 million shoppers on their platform in the U.S. alone. In the U.S., Mexico, and Brazil actually make up their largest markets. So I'm interested in seeing, of course, like I said, how Flexport grows with Shein. I think that Shein also needs someone like Flexport to continue their growth in the U.S. as well and to support that growth too. In the article, Britton Ladd is fortunate to comment on it and discuss a little bit more into some of the ethical aspects as well and how Shein is trying to get out of that uh, reputation, you could say. So
Mhm.
again, we as we continue to watch Flexport's growth here, I think this is going to be one that's going to help propel them in different ways, and it might allow them to, like we said in the article, possibly raise some more money or raise money and acquire some competitors or other marketplaces to help it expand as well.
So is she in like the Amazon marketplace essentially is what it sounds like? Do we know is there a kind of a breakdown between the marketplace sellers and what the company's
Yep.
selling? I know in Amazon it's like 60% marketplace sellers, 40% is just from Amazon. Is there a similar breakdown for Shein?
I I couldn't find those exact breakdowns, but yes, it does allow for that. So Shein itself does manufacture, right? So we brought that up in our last two episodes, I think, ago, that they're looking to sell its supply chain as a service. So what's very interesting is you can technically now have sellers who are leveraging possibly their supply chain manufacturing side, using, of course, their site to also reach out to consumers, and then at the end of this have Flexport fulfill those orders as well. So it is a really interesting uh, play, I think, for something outside of fulfillment by Amazon for those U.S. market places or retailers as well.
And then I know Shein largely, if not exclusively, uses air freight. Is
Yeah.
do they do ocean as well? And is that part of this that Flexport, works with both of those modes?
I think that would be helpful, but I think it's going to be a little bit. It's going to continue to still be air freight, mostly on that side. And it's interesting. We'll see how this helps them because I know that Shein's been having issues along with Timu and well, really taking over a lot of the available air freight space. So we'll see if this allows for even Flexport to grow that unit of their business as well.
Yeah, speaking of air freight, have a Sonar air cargo price chart that I think is pretty interesting. So this is the Drury air freight rates from Hong Kong to LAX, going back to about 2012. And you can look at it's about $5.76. That's dollars per kilogram. And you can see, I mean, sort of set aside what happened during the pandemic when the planes weren't moving and there was this really capacity crunch. That's at a level that's way higher than what it was pre-pandemic levels. And you sort of look at pre-pandemic levels, like even the only time that would get to $5 would be during kind of the seasonal surge, kind of late in the year, kind of right before Christmas. Sometimes we have things pick up just because they were so time sensitive, they needed to be on shelves for Black Friday. And now it almost seems like the air freight rates are stuck at this permanently higher level. And what was interesting is last week I was in Houston visiting with some clients, and Charles Odom from Halliburton was one of the clients we visited with, and I don't think he would mind me sharing this anecdote. He says the air cargo is really being taken up dramatically by companies like Shein and T-Mo because it's just tremendous amount of packages they're putting on these planes, and this is an entire market that never used air freight before. So that's what's causing a lot of this those prices to be seemingly at a permanently higher level. And I found that interesting. If I find it interesting, I wondered if other companies will adopt this more on demand manufacturing model, which could make air cargo maybe permanently more expensive.
Yeah, and I will say too, kind of a sneak peek for everyone who's listening and watching this as well. Me and Eric are working on a lot of exclusives on this exact problem, working on stories about Temu and Shein and especially air freight market too. So watch out for that over the next couple of weeks here on FreightWaves.com because you're 100% right. It is something that's, you could say, clogging up the system in a way. We're also going to be diving into kind of the of course ethical side of this, but the consumer habits behind it, and why we see consumers so focused on sustainability and ethics, but also see these. Shein is trying to push away from being a Chinese company, but we can be honest, what we look at as a Chinese companies and how they're continuing to grow. So we'll of course have probably some guests on the Stockout over that time, but check out FreightWaves.com because we should have some good exclusives over the next couple of weeks just on this topic alone.
Great. So be sure to check that out. And then want to move on to our next topic, which the NRF, National Retail Federation, says that there's steady spending by value-focused consumers was the way they put it. And you ran through a few stats with your interview with Kaylee, up 2.9% year over year in March after being up 3% in February. Sort of settled into that sort of up 3% range. You exclude gas and restaurants, which is what the National Retail Federation does because they do that to get what's at the core retail sales. I guess most of their members wouldn't care about gas and restaurants. That would just take away from the ability to spend at other retail stores, up 3.12%. And I guess what strikes me is all those numbers are rising less than the rate of inflation. I mean, just look at the last month, inflation up about 3.5% year over year. So people are buying somewhat smaller number of items. So that sort of stood out to me. And then the other thing that stood out to me is when you broke down the various categories with Kaylee, sort of the categories where it's up year over year, various hobbies and sporting goods, personal health, hygiene, grocery, and some general merchandise. And then the losing categories are clothing, building, furniture. JB Hunt actually called that out as well. And their analyst call, they said that the furniture was weak, and electronics. And so some of these losing categories are sort of the more discretionary categories. And a lot of the categories where the sales are up year over year, just a lot of things where there's, they're less discretionary, and it's just inflation is pushing up those prices. And the exception to that is maybe the hobbies / sporting goods, but those are things that people just really care about and are willing to sacrifice in other areas more so than furniture, gardening, or electronics. Is that sort of your take?
And I'm interested in especially the sportings one. I could guarantee we're going to see that continue to probably fall off throughout the year in terms of that growth. I mean, you've got kids, all the sports are starting right now. You've got summer seasons and different leagues starting up as well. So I think that's part of the reason we see that increase in numbers. It's just that time of the year where you start to, the store and get your kid a new mitt or get them some new shoes and things of that nature. So I wouldn't be surprised if we see that start to fall. But we've been wondering with especially the more of like the truckload market too. I mean, clearly all the larger goods that would take up a lot of space on those trucks are down. On top of this too, you're seeing online sales up, and I think, like you said, it's more of like these discretionary goods. So I think all of the shipments that we see out there are smaller and not as bulky. So of course that means less capacity needed to move a lot of this around too. So also interesting to see like the building and garden down during this time of the year. So maybe interested to see how that number comes out for April next month. But yeah, it's I guess I wasn't too surprised by a lot of these numbers, but you're right when you especially compare it to inflation. That's very interesting to kind of look at as well. So yeah, those big ticket items are pushing it. And then something else that we brought up too, me and Kaylee, is in this they talked about tax refunds, which I was hoping to hear more of as well. And it sounds like it wasn't a huge increase. It went up about $100 per household. I think the average was about 3,100. It was 3,000 last year. But I think, of course, with the borrowing rates we've seen, credit card debt going up so high during the holiday season, it seems to me like that's not going towards big purchases. If anything, probably going towards paying off some of those purchases that families had taken during the holiday season.
Yeah, we have a sonar chart to that effect, which basically shows that people are putting more on credit card. I mean, so this is total
Ooh,
revolving credit, that white line. So it's 1.338 trillion. And I just did a presentation last week in Houston, and I sort of was updating some of the slides from the previous year. And a year ago, it was 1.2 trillion. It's went from 1.2 trillion to 1.3 trillion. So this is credit cards, total revolving credit. So credit cards might include some personal loans in there as well. And you see how that line just sort of steepened right as the line for inflation, which is the CPI is in green. Right as that steepened 2022, 23, and even with inflation, maybe the rate slowing down a little bit. It's been going on now for about three years, the higher inflation levels. So really a lot of pressure on the average consumer, I would say. I want to move on to the next
yeah.
topic, which is some of the companies started reporting earnings last week. I thought one that was really interesting that I always follow closely is JB Hunt. And I think what I found to be interesting about JB Hunt is they seem to be managing their company a little bit more like it was as if it was a privately held company versus a public company is trying to meet sort of the next quarter earnings. I mean, the sort of underperformed in terms of the street expectations. Stock was down about 8%, but they really have a lot of intermodal capacity that they could put to work as volume comes to fruition here. They say they have at least could handle at least about 20% more intermodal volume than they're currently moving, given the number of containers they have. They did this acquisition of Walmart's containers, and that was a way to expand their capacity towards their goal of 150,000 containers without adding additional containers, into the marketplace. And just really sort of highlighted some of the competitive, dynamics across modes, and just sort of how much more competitive it is in the eastern U.S. between intermodal and truckload versus the transcontinental. So overall, their volumes were flat on intermodal, but it was up double digits outbound from L.A. But then it was down about 7%. What they call these local east markets, which would be like a Chicago to Atlanta. And there's actually a trend that we saw in Sonar as well. This Chicago to Atlanta have a Sonar chart to that effect. Which basically shows volume declining from earlier this year. And it's you look at sort of truckload spot rates. We have a data series in Sonar and truckload spot rates. So there's the intermodal volume where in beginning of February, it's about 325 loaded domestic containers were moving in that lane every day, and then in the last week, 272. So a pretty significant decline. And that's pretty consistent with just the truckload rates in that lane. If you look at the market, we have market dashboard within Sonar, which shows you the spot rates for truckload, and those have really come down in that lane in particular. And if you look at this other Sonar chart, the domestic container volume loaded, this is kind of the one I look at when I am trying to evaluate what's happening in the domestic intermodal space. So that's the market that JB Hunt and Hub Group and Schneider compete in. And this volume was up about 3% in the first quarter. So maybe just a little bit better than JB Hunt reported. But this is going to be much closer to what a company like that reports versus what the Association of American Railroads reports for intermodal volume, because the AAR data includes domestic and international containers. It includes loaded and empty containers. And so that was up about 11.5% in the first quarter, but it included all of these international intermodal containers and then the repositioning of the empty containers back to the port. So the international volume was up over 20%. And so that's part of why the company missed expectations. Just the expectations were too high because not everyone uses Sonar like they should.
Yeah. Head to sonar.freightwaves.com to learn more on that. But yeah, that, and then you add on, and I think JP did a great article too, talking about the brokerage issues that they've had as well. I always love listening to JB's earnings because they just hit on so many aspects, I think, right, of the supply chain as a whole. And I think it's showcasing maybe not so much the positive news that we're hoping to see earlier in the year. I mean, it is pretty early into April, but it's you could say rent's almost due, right? As we're starting to wrap up the month. And from at least what I'm hearing from brokerages, they're not seeing that, especially that 22% decline in volume and that changing at this time. But hopefully, it sounds like we'll see a bit more of a surge. It's something I think if you want to get into as well as the state of freight, something that we discussed too. Okay, when are we actually going to see that turnaround, and when can brokers in particular, start to see a change in the marketplace as well?
Yeah, the brokerage market seems really like a tough market right now. I mean, you look at the ICS results within JB Hunt, which is that brokerage segment, volume down 22%, and then a 5% reduction in revenue per load. So,
Yeah.
yeah, it's tough out there for brokers. There's just not a lot of, seems like there's a lot of brokerable loads, and the loads that there are brokers, there's too many brokers competing for those loads.
Yes. Yeah. Big problem.
Yeah, so our last topic today is want to encourage everyone to check out last week's State of Freight webinar. So that's where Zach Strickland, our head of market intelligence, interviews our founder, Craig Fuller, and what's happening in the market. And Craig wrote an article to coincide with that and sort of called the bottom of the market. We've been in a freight recession or freight depression since early 2022. So it's now about 2 years old. Things don't seem to be getting, a lot, worse. I think just the increase in carriers' costs and kind of maybe make it so the rates can't go much lower than they have been. And I think the eventual improvement is based on more capacity coming out of the market, the economy holding up. The economy is in a better place than I think people realized. You can go back a year ago, a year or so ago, people, a lot of people were expecting a recession. I think those concerns have been assuaged. And then also the interesting dynamic from that webinar, which is kind of a reminder, is that there's a lot of uncertainty as far as tariffs go, because U.S. has gotten to be more protectionist. If Trump were to get elected, they'd be even more protectionist, potential tariffs on Chinese imports, and that really sort of create a lot of volatility the last time that happened. So you may have shippers importing goods ahead of potential change in administration, early next year. Not every company has the luxury of being like Shein and just saying, oh, the value of the shipments are directly to consumer. They're worth less than $800. Therefore, we're going to get away from having those tariffs. That does seem like a loophole that a potential Trump administration would close. Do you have any other takeaways from the state of freight or thoughts on that?
I do agree with you on the Shein aspect as well. I mean, that could be interesting to see and to play out. And yeah, I do expect. I mean, I'd hope to see that surge, likely right before the election. I mean, we'll see how that turns out. I will say, I remember at least I more on the raw materials side of things when we last had Trump tariff talks. Many of them were, at least on my end, just not ordering anything, waiting to hear that out. So there could be that couple month period between office exchanges, if that were to happen, where there might be a little bit of maybe hesitation from shippers of those type of materials, but. Dependent as well on what that election turns out. There could also be a more positive outlook from consumers, right, in time for good old retail season and holiday season as well. So I always get, I think to forecast the next couple of months during an election season is always a tough one in particular. And so I think we'll clearly, not even to like push this out there, but you brought up Sonar earlier. If anything, I think we're going to all be watching Sonar very closely, and a number of our data contributors as well, and to really see what's happening, because I think it's going to be a day by day thing where we're not literally day by day, but week by week that we're watching to see how the market performs as well.
Yeah, for sure. I mean, election years tend to be big on government spending, but as far as companies spending capital, they tend to be a little bit more cautious because you don't know what's going to happen. Just almost too much,
Yeah,
uncertainty. So we'll see. Could be kind of a mixed bag by sector. Uh,
exactly. Yeah, definitely. For everyone out there, thank you for checking out this episode. Again, we talked about the Shein Flexport. Go check out that article, and also at the end of the article is the state of freight. In case you missed it, you can check it out there too. But most importantly, make sure that if you are just checking out this community for the first time, that you join the community. Go to freightwaves.com, click on newsletters. Make sure you click on the Stockout, join the community, and then in your first newsletter, you'll get a discount code, of course, to join us at our June event, the Future Supply Chain, from June 4th to the 5th. Hopefully, we'll see you all there. Until then, we'll see you next week.